final pattern of this series is called the diamond formation. And do you know what? We've been a little bit naughty here because technically it may not even be a continuation pattern, you know. These are advanced patterns and they are certainly a wild card. And we will explain that. They often do act as continuation patterns, but they can also be reversal patterns. What these formations are like is they represent a little bit of consolidation where the price volatility expands and then it contracts again. And it's like a coiled spring. They can spring upwards or they can spring downwards. There is a very particular way of trading these patterns, and it is to not get involved with a diamond until it shows you its hand. If it starts to break on the upside, then you should trade it to the upside. If it starts to break on the downside, then assume more downside. So you must always pay particular attention to the outcome of a diamond. If you see one on the chart that you're trading, avoid it until you get a signal, and we will show you what the signals you should be looking for are. But before we go on to that, we need to show you what this diamond formation looks like.
You'll find that these patterns are easy to spot because they resemble the shape of a diamond. In both instances here, on one we have a ascending market, the price swings become more volatile and then they contract, a little bit like a coiled spring at the end of a diamond formation, and then you know you're going to get a big price movement. Same here, the market ascends, the market starts to swing more violently and then it contracts again like a coiled spring, and then the break comes on the downside and you get quite a lot of downside action. So when you see a diamond formation, do not trade it until you get a signal, which is a close above it or a close below it, to know if you're going to go upwards or downwards. It's like a coiled spring. Diamond formations are a relatively rare occurrence on stock market charts. We found you a real example here on the S&P 500. The market was trending upwards, had a large down day, and then started to form a diamond formation. You can see how the price swings was quite volatile, then started to contract just as the market broke out of the diamond and forcing the price downwards. This was a continuation pattern diamond. If there's one thing you take away from this tutorial is know that a diamond is pretty much like a coiled spring ready to erupt in whatever direction it decides.
It's true what they say, a diamond is a girl's best friend. However, a diamond is not a trader's best friend because they are such tricky patterns to work with. However, it's so important that you know how a diamond works because they are very powerful patterns. You may have noted in our ebook for this series that we show you obviously how high patterns will send shares. There's no entry in that book for diamond formations, and there is a reason for that. There's no accepted or conventional way of working out how high a diamond will send the shares or how low. However, there is one thing that we have to tell you. The length of a diamond is an indicator of its importance. So the longer it takes to form, the more impact it will have on the rally or the drop. At this stage, you will have watched the tutorials for the buy and sell lines, the reversal patterns and continuation patterns. So when you look at a stock market chart, you should be able to pick out any reversals, any continuations, and work out if that share price is likely to go up or down. Before you do start trading with your own money, we have an eDVD where there is an hour's worth of technical analysis. Our trader will look at loads of different charts and they will identify the patterns and teach you more in-depth details about the patterns. We strongly do recommend that you watch that prior to trading. But we do thank you for your time, and if you have not looked at the ebooks, please do look at them and look at the DVDs as well. And congratulations, you are very much on course for becoming a stock market trader.